Welcome to our weekly Forex forecast. My name is Jay Norris. I teach trading at Trading University. Good to be back. We're on summer break from teaching. We generally take July and August off for a much needed break. We'll stop in every now and again here for the weekly forecast to show you what's going on. First market, Australian US dollar. Aussie US dollar backing down a little bit. You could see some green lines here, some support lines. I guess you keep it simple. These would be areas where you'd look to buy dips. And one way to look at it would be the good, better, best. Realistically, probably more apt would be, this would be a short-term level to buy a dip, intermediate term, and then a long-term level. So you do have support just below in the Aussie. By the way, that's 30-day support though, so that's a good level that you could swing trade from that level. On the other hand, if it didn't hold it and you started getting closes below that line, just above 74 even, then you'd expect that market to back down to the next support level down there at 73 and a quarter or so. So that's how the Aussie's sizing up. Swiss franc. Love this market long term on the upside. You can see that you're starting to slow down a little here. Look at those wicks. Market's having a tough time getting to 99 even, let alone up to the par level. We see par as a big level. If you can close beyond par, we think the door is open to the big move that we've been talking about now all year, really pan out to a weekly chart. You'll be able to see that. Wow, look at that. Look at how long it's been in a bear market. And if you can crack 100, you'll also climb out from underneath that resistance. The market will climb out from underneath that resistance, and we think there's plenty of room up above. There's our upside target right there, initial upside target, 121. That's a long ways off. That's a lot of money too, boy, if you're on the right side of that trade. So back to the daily chart, market's just kind of biding its time here, but hey, I have learned this in trading, that you have to be as patient as the market is. You have to be more patient than nature, right? You have to also understand your own risk tolerance too. So you need to figure out how much you're willing to risk to go after that payday. Don't think how much money you could make when the market goes up there. Think about how much money you're willing to risk if the market goes down to here again, or even down to 95 again. You have to be prepared for that. So love dollar Swiss on the long side. Continue to call that market the trade of the decade. As long as we're on the Swissy, also we like Aussie Swiss. Similar trade here in Aussie Swiss compared to dollar Swiss. Definitely like this one on the upside too. You can see you're just sitting above resistance for that trade too. We think the ideal trade would be if you get this market, Aussie Swiss goes down here just above 72. We think that'd be a great place to initiate a long position here. I don't know if it'll do that though. We'll have to see if that level doesn't hold where it goes. But by the way, this level is a good level to day trade off of too, right there. 73.50, 73 and a half. So you look for support there. Short-term trade to get long, maybe put a couple on, take profit on one if it starts to move for you, but try to put yourself in a position to let the other one go, because here's a little bit longer-term view here. Here's your weekly chart. Look at the room up above in Aussie Swiss. They're just above 90 even. That's a long ways off. That's going to be a profit objective for us also. So love these guys on the long side. Love buying dips in there. Love maintaining long positions. I'm maintaining long positions. I'm not going anywhere. But you're always interested in adding on dips, right? Here, as far as a breakout, you get a couple closes above 76 even up there, and I think the horse is out of the barn at that point, and I would definitely be adding there. So love these. I love a trade where if I'm in it, I'm willing to add on a dip, and I'm willing to add on a breakout. So can't say enough about those guys. Next market, the dollar index itself. There's the dollar index. Look at that big shift here. Last time we spoke that the 5-day pattern, that 6-month pattern was down. Now the 6-month pattern, you shifted higher. On the other hand, you have to go back. Essentially your long-term secondary pattern is still down barely. You can see you've got resistance right there. So you had a lot of good upside coming up on good resistance. And it wouldn't surprise me if the market chose to take a break at that resistance, as it does so many times when it comes to those higher time frame 2/3 retracements. So wouldn't surprise me now if dollar index does decide to take a break. On the other hand, Let me pop out to a weekly chart. This time of year reminds me of what happened 2 years ago when we took a break from Trading University. We were waiting and waiting and waiting for this rally to begin, this big rally up in the dollar, and I had built a pretty good position. And so of course you're always nervous when you're in a position like that and it's not going anywhere, and you're kind of looking over the cliff, so to speak. Here, not much below that market, but eventually it did take off. But when did it take off? When we were on our summer break, so we didn't get to teach through it. I was looking forward to teaching through a runaway rally like that, but you know what? Summer came, we went on our break, and then by the time we came back, that guy, the horse was out of the barn, and you already had a big move underway. So hey, wouldn't mind seeing that again, right? So there it is right now. You're in mid-July, and that guy's starting to steam higher. So we'll see if you get the breakout or not. But realistically, the old saying is so true that you have to hope for the best but prepare for tough times. So certainly times are great right now because we're sitting on a nice lead, sitting on nice profits. But it wouldn't surprise me if the market does back down at least a little bit from that level. But watch that level. And we'll come back at you too if we get major breakouts here. But if this guy slumps and you start to see some consolidation through the dog days here, I don't think there's any need to do the report. I'm on summer break anyway, right? But if you get a breakout, I'll come back in and we'll talk about that. Euro, love the euro. Look at that. That's a new weekly close for this guy. What do you got to go back? I'll go to a weekly chart. That's like a new 5-month weekly close, right? Love short this guy. I'm short it. No matter how I cut it, no matter how I analyze it, I'm staying short. Hey, you go back to most of March, so April, May, June, July. So you got a 4-month low settlement there. You see that support there right there? Let me pop back down to a daily. That's pretty good support right there. That would be enough to swing trade long. So I'll probably just sit tight and see what happens on there. Maybe watch it on a 4-hour chart to see how price reacts at 109. I have a mind to I want to stay short. I'm short from up here, so I've got plenty of room on that. I will have to make the call. I do have to be mindful, though, that we all have to be mindful that that's a big level. That would be an area on the chart where there'd be nothing wrong with taking a swing trade long from 109 if support holds and you get a shift in momentum back higher and you get the proper formation, you get a buy signal against 109. That's a big level. I have to respect it. We'll leave it at that. Again, I'll come back and talk about that. If it gets through it, I'll be back. But if it doesn't and just starts wandering around down here sideways, I would expect a short covering rally in there. We'll have to watch though. Stay tuned, right? That's all you can say. Gold market, cover that briefly. See that purple line? That's a 50% retracement, and that's a 50% retracement. You go all the way back to this right shoulder here, and that's a 50% retracement of this entire move down. So that's a big level. And there's interesting. Look at that trend line there. You go all the way back to the top of the bull, the peak of the new bear, all the way back to summer of 2011, and look at gold's right at that trend line, and you had that big weekly reversal candle last week, and it looks like you had some more downside this week. So hey, long term, we think it's a great level to be short in gold at these levels. We think it's just a bear market rally, albeit a pretty big rally nonetheless. Big move for the gold bulls, but we don't see gold having legs beyond that point. Nice rally, but it's probably going to be c'est la vie to that just a large counter trend move. So I'm not one to speculate in commodities because they tend to be a little more volatile. It's not like the currency markets where they tend to be more range bound. So riskier market for my style. I like the currencies, but overall, I see gold as a good indicator market, and we see that indicating that the stress is coming out of these markets, that the risk is coming out of these markets right now. So we would see a normalization. We would see gold turning around as to mean a normalization in the financial markets back to less volatility, etc. And we think that favors a strong dollar, continue to favor a weaker euro. Cover U.S. interest rates real quick and we'll wrap it up. Here's the U.S. 10-year Interest rates, look at that. The 10-year note got all the way down to below 140. Look at that massive double bottom now you have. Same level it got all the way back to down back in July. This, it's, almost to the date there, mid-July 2012. So you got this massive 4-year double bottom in U.S. Treasuries pan out to a monthly chart. And there it is. Wow, look at that. Big double bottom in the Treasuries. And, wouldn't want to keep pressing that market down any. So, again, if there's not a whole lot of downside left, what does that mean? You're looking at upside. Upside in this market would mean higher rates, not lower rates. And again, that favors our current thesis, which is a stronger dollar, steady to stronger dollar, easier to weaker euro, Swissy, etc. My name is Jay Norris. Good to be back. I was just looking. I've been doing this for 4 years, so you can look back and see what we said pretty much every week going back the last 4 years. So there's a pretty good track record back there. So that's a pretty good record. Glad we chose to do this, to just kind of come and step out and analyze markets like that, forecast like that. And it's working out nicely to me. It only makes me a better analyst, which certainly makes me a better trader. Thank you so much, and we'll see you back here when we see you. Thank you.